So firstly, we'll cover how you need to make the choice to change, and then how to develop a roadmap to get your business from one point to another, and the dashboard for your business. We'll then get into the 7 financial metrics for business growth, and then we'll show you a worked example which demonstrates how you can make seemingly small changes to your business, and then the compounding effect on the bottom line and the cash flow can be significant. And then it'll be accountability time, when you have to decide what action you're going to take as a result of coming along today. To start with, in order to grow, we need to change. And we've been through a lot recently, and it's likely you need to make some changes in your business. And change just won't happen on its own. You have to make the choice to change. And there's generally 5 steps in the process. The first is being aware that you need to change. It's unlikely your business has been able to continue as normal, and change needs to be made. The next step is to accept that you need to change. It may not be easy, but the alternative of not changing won't be easy either. Now you've accepted change is needed, you need to take action. What steps do you need to take to enable the change? Most people get stuck here, and we may need to respond to immediate actions while in crisis mode, but then fail to take further action required. And to make sure we do take action, accountability is required. Being held accountable by someone independent really does make things happen. And finally, we need to take time to acknowledge the change we've actioned. Take your team on the journey and give positive reinforcement. Secondly, before we can make a plan for where we want our business to go, we must first understand where our business is now. This is your point A. The impact of COVID means that it's likely you're further away from your destination than you would have been. Point B may be harder to get to now. It's likely that the original point B is still possible. It may just take a little longer to get there, or getting there might look a little different. For example, initially your point A may have been a $50,000 overdraft, and your goal of reaching point B was to then have a $50,000 cash in the bank within 12 months. So you'd have to increase your bank account by $100,000 to reach point B. What does point A look like for your business now? Maybe you had to extend your overdraft by another $25,000 to cover your expenses over lockdown. So point A is now a $75,000 overdraft, and the journey to point B is increasing the cash in your account by $125,000. It might be more realistic to aim to reach point B in 2 years instead of 12 months. Do you know what point A looks like in your business, and what is your goal for point B? And then what does the journey look like to get there? So now you know where your business is at a starting point, and you know where you want your business to go. Now it's time to revise your plan. This could be reviewing and updating your existing business plan, or it could be developing a business recovery plan. If the impact on your business has been minimal, it's likely an update to your business plan is all that's needed. However, if your business has been significantly impacted, you could develop a business recovery plan. This will help you revise your business cash flow requirements and then determine whether any additional finance is needed, and revise your business budget and break-even analysis. You'll also establish your most critical KPIs to monitor and identify opportunities, weaknesses, and challenges in your business. After discussing your starting point and your plan, we thought now would be a good time to introduce you to the now, where, how concept. And this principle is helpful for future planning and goal setting. Firstly, you need to identify the now, and this involves looking at your financial numbers and identifying what we know now about the current financial position or performance of your business, such as the profit, cash flow, and business value. Next, we set the plan by identifying where we want to get to and what that looks like. When setting financial goals, they should be clear and measurable goals. For example, if you plan to reach a certain profitability or improving cash flow by a certain value. Finally, we identify the how. So that's what steps are required to get from now to where. And this could be implementing key performance indicators into the business, or increasing leads and conversions, or reducing costs and overheads. We can assist you in creating a business plan. And once that plan is created, we can help with reporting and accountability to help execute that plan. Financial position is a common now, where, how goal. However, often the financial position goal will also affect people and roles and hours of work. If you identify the current situation for how people are working versus where you would like people performance to be, that's a great start. And this will then help you set a plan. For example, what training might be required, what support or perhaps accountability is needed to move people from the now to the where. So this is an example of planning out a financial goal. When working on your budget, you start with your profit. You need your business to deliver, and then work your way up to determine the required sales level. So for example, in the past, $150,000 profit might have been your target profit for your business to deliver what you want. And then being in lockdown may have shown that you can work with less. So after revising your budget, you may be able to reduce your profit target to $130,000 to reduce the pressure on your business. And then your overheads were $350,000, but after leaving no stone unturned when reviewing expenses, you might have been able to trim this down to $325,000. So this gives you a gross profit target of $455,000. And if we want to keep our gross profit percentage the same at 40%, we'd have to achieve a sales level of $1,137,500. And while this is lower than our previous target, we may need to be a bit more strategic with our expenses to ensure our goal is attainable in the current climate. Of course, you'll need to develop this in more detail. You then need to break this down into monthly targets and monitor these to make sure you're on track. So now that you know where you're going and what you want to achieve, it's time to set up your dashboard. So the dashboard on your car shows you how fast you're going, how much fuel you have left, and the temperature of your engine. So it gives an indication about whether you'll make it to your destination, and it's the same with a business dashboard. The thing on your business dashboard are key performance indicators, or KPIs. Essentially, they're measures which tell you if you're on track to achieving your plan. Your dashboard should show the top 4 or 5 measures which drive most of your business improvement. Focusing on a small number of KPIs allows you to capture, monitor, report, and improve them on a regular basis. And your most important KPIs will depend on the type of business you have, as well as your goals. So, for example, a manufacturer's most important KPIs might be the gross profit percentage, cost of rework, work in progress days, and debtor days. While a wholesaler's KPIs might be sales, the gross profit percentage, average client spend, and transaction frequency. And it's important you determine which KPIs you should be measuring and then set goals for improvement and establish a dashboard to regularly monitor how you're progressing. And we'll take you through an example dashboard shortly. So when you set your goals, do you have someone hold you accountable for what you're committed to? And what are the consequences for you if you don't achieve your goals? Do you have a soft coach or a hard coach? If you think back to the 5 A's of change, one of them was accountability. So you need to have someone independent hold you accountable to your actions and make sure there's consequences for inaction. Having someone close to you hold you accountable generally doesn't work. Independence is key. So just to summarise, if your business is the vehicle that delivers you what you want in life, the top 4 things you need to do to make sure you get to your destination are, firstly, set an annual plan. And this doesn't have to be extensive. It could just be you figuring out what you want from your business. Secondly, set an annual forecast and then compare this to your actual results. Then set and measure your 4 to 5 most important KPIs. And this is where a monthly dashboard can be very helpful. And finally, have someone independent hold you accountable to your plan. This means comparing against budget and business plan. And I'll now hand you over to Ben, who will take you through the 7 KPIs for business growth.
Awesome. Thanks, Kate. Right, I will now take you all through the 7 KPIs for business growth and how they each impact the growth equation. The growth equation will highlight the cumulative impact these KPIs have on profit and the value for the business, showing how improving some or all of these KPIs will have a maximum benefit in terms of profitability and value. The first KPI to grow your business is to increase your customer retention rate. It's much easier and cheaper to make sales to existing customers. In fact, statistics show it's 6 times easier and cheaper to make sales to existing customers than it is to new ones. So improving your customer satisfaction will make them want to return, therefore increasing our customer retention rate. So what's your point of difference? This will be different for each business, but once you figure out why your customers choose your products or services, you can focus on that even more. Follow the FGG principle to improve customer satisfaction. Find out what they want, go get it, and give it to them. The second KPI to grow your business is to generate more leads. The best way to generate more leads is to delight your customers so they become promoters and provide you with more leads. Another way to use your existing customers to promote your business is an incentive-based referral system. However, you can't purely rely on your existing customers to do your marketing for you. So you must attract strangers using your marketing strategies and by providing them value. This may be a free download on your website or a free consultation or a free trial. Show them the problems that you'll solve if they engage you in service. This links back to finding out why your customers are coming back. So identify the problems that your business currently solves for your existing customers and use that in your marketing strategies. The third KPI to grow your business is to increase your conversion rate. Do you measure how successful you are at converting leads, quotes, and proposals into sales? Do you regularly review why you aren't converting more? You should be monitoring the conversion rates of all the members of your sales staff. If some of them are performing better than others, find out why. Are you using the right people in the sales process? A key to successfully converting sales is to ensure that you're dealing with the decision maker. Don't deal with the gatekeepers. Get straight to the people who can make things happen. You should also try offer a range of options. So the question becomes, which option should I buy rather than should I buy? The fourth KPI to grow your business is to increase transactional frequency. As I said earlier, it's much harder to sell to new customers than it is to existing customers. So it makes sense to encourage those customers to buy from you more often. You can do this by using one sale to drive the next. So offer a limited time special deal or discount for customers' next orders. You'll see this when you're online shopping. Here's 20% off your next order, or the stamp card at the local coffee shop. So, buy 9 coffees, get the 10th free. It almost feels like it's a game trying to get to that 10th coffee, but meanwhile the coffee shop has made $50 on coffee. The fifth KPI to grow your business is to increase transactional value. This doesn't necessarily mean increasing your prices. Think about how you could add more value to your customers. Could you provide them with a range of options? Is it clear what your business offers? Don't assume they already know, tell them. Follow the would you like fries with that concept. Don't try offer a discount unless the customers have purchased an add-on. The sixth way to grow your business is to reduce your variable costs. These are the costs that increase as sales increase, such as direct labour, costs of materials, and sales commissions. Implementing better systems to accurately record time and materials used, as well as implementing strategies to reduce rework and wastage, will help reduce your variable costs. We understand, given the current economic climate, some of these costs may be out of your control, but tracking variable costs over time will help you to identify trends to help with decision-making process. Monthly management reports are a great way to track gross profit. More often than not, you'll understand why on any given month the GP might be up or down. But as I mentioned before, tracking over time will help you to identify trends. So for example, your customers may be demanding more of a certain product. You'll see this by a certain product having higher sales. Is there a way you can negotiate with your current suppliers to reduce the price given the purchase quantity has risen? Management reports are a service we offer, so if you think your business would benefit from this, please get in touch with our team. The seventh KPI to grow your business is to reduce overheads. These are your fixed costs like phone, power, rent, or office supplies. How often do you review your overheads? It should normally be done annually, so go through your annual financial statements or your zero reports and identify overheads you could potentially reduce. You may be able to negotiate better terms with your utilities and rent, or reduce the amount of office supplies being used. While we're on the subject, let's talk about accounting fees. We're telling you to reduce your costs. So if you think we're a cost, then you should cut us now. But if you want to work with us as a strategic partner in your business, then you need us now more than ever. Think of us as an investment rather than a cost. Our goal is to save you more in tax or help you grow your business far more than any extra you may spend in accounting fees. Sweet. So next up, we have the growth equation. So this is a calculator used to show how small changes can have a big impact on profit. By monitoring your KPIs, you can set goals for improvement. The calculator shows the 7 KPIs for business growth in action. For efficiency, during this webinar, we've used screenshots of the calculator. Sweet. Let's have a quick look at the current KPIs for the profit company and profit for the example company, sorry. And then I'll show you how the impact the small changes can have on profit and the value for the business. Please note these numbers have been rounded, so just in case you guys are all trying to do the calculations in your head. Sweet. So this company has 765 customers with a retention rate of 85%, giving them an average of 650 retained customers. They receive 145 inquiries with a conversion rate of 50%, which gives them a total of 723 customers. Each customer makes on average 1.1 transactions per year, with an average transactional value of $1,560. This results in annual sales of 1.24 million. Their cost of goods sold is 70% and their overhead expenses are 265,000. This leaves them with a net profit of 107,000. To demonstrate the increase in value for the business, we've added a very basic valuation multiplier of 3 times the profit in this calculator. This isn't actually how we would value a business, but it does provide a very rough guide. So the current value of the example business is just over 320,000. So what changes could this business make to improve its profit and therefore its value? The first way to grow your business is to increase your